It's Monday morning, 7 a.m. The dreaded restaurant inventory count is here again. Your back-of-house staff groans, nursing their coffees like lifelines. But here's a bigger idea worth pushing. Inventory is not just about counting what's on the shelf. It's about uncovering the hidden story of your restaurant's stock, waste, cash flow, and profit. What if this so-called tedious chore was actually the secret to unlocking hidden profits? Today, we're diving deep into a specialized guide on taking a physical count of restaurant inventory that actually counts, one that transforms a dreaded Monday morning ritual into one of the most powerful decision-making tools in your business. Let's get into it. At the heart of this research is a deceptively simple question. When your restaurant finishes an inventory count, do you actually end up with information you can trust and use? Because if the answer is no, the count becomes busy work, and that matters more than it may seem. The core problem is this: all restaurants have an inventory process, but almost none have the time to do it right. This lack of time pushes the count to the back burner, leaving operations dangerously vulnerable. An accurate, consistent inventory process helps restaurants keep enough product for guests, spot waste and theft before they spiral, avoid tying up cash in slow-moving stock, order intelligently, and understand the true profitability of every menu item. In other words, the count is not the finish line. It's the starting point for better decisions. And that leads us directly to the problem we need to fix. So where do existing approaches fall short? Let's say a manager is rushed and cuts corners. They might only count the highest volume items, like hamburger patties, because those sell the most. But this approach leaves a massive gap. In doing so, they completely miss high-cost, low-turnover items like premium fish and expensive cheeses, sitting quietly in the back of the fridge, expiring and eating away at margins. And it goes beyond just what gets counted. Counts are inconsistent, weekly one month, never the next. Count sheets are disorganized, forcing staff to zigzag all over the kitchen. Buy-in from the team is low because no one explained why it matters. And once things break down, the consequences stack up fast. Waste goes unnoticed, ordering becomes guesswork, cash gets trapped in excess inventory, and cost of goods sold gets completely distorted. The paper makes a critical point. There is no single perfect inventory method, but there are definitely wrong ones. And inconsistency is the biggest offender of them all. To fix this broken system, operators need a proven and systematic approach. Enter the STO framework. STOP stands for stock, theft and waste, ordering, and profitability. By prioritizing these four pillars, a restaurant can turn an overwhelming weekly chore into an organized strategy. First, prioritize stock by counting high-cost, high-risk items before anything else, then cascade down to high-turnover ingredients. Second, track theft and waste by comparing what your sales data says you should have used versus what's actually on the shelf. Third, sharpen your ordering by tying reorders to par levels and real usage instead of gut feeling. And fourth, protect profitability by understanding that money spent on inventory is not the same as inventory consumed, a distinction that changes everything. Build consistency by scheduling counts, assigning reliable staff, and organizing count sheets to match the actual physical layout of your back of house. The STOP methodology turns inventory from an isolated manual task into a repeatable, intelligent operating system. And once that system is in place, the findings become eye-opening. When the STOP framework is implemented, the findings are immediate and remarkable. Restaurants using systematic inventory counts reduced waste by up to 30% through expiration alerts and strategic menu specials. Portion control problems dropped by 80% once theoretical versus actual variance analysis was applied consistently. In one case, a manager tracked 5 bottles of tequila, sold 40 margaritas at 1.5 ounces each, but ended up short. The culprit was a bartender overpouring, using double the intended amount per drink. That single portioning issue was costing over $2,400 a month in tequila alone. Then there is the profitability side. Buying $200,000 of wine in December does not mean your cost of goods sold is $200,000 that month. Half of that purchase sits on the shelf as an inventory asset. Without a proper count, cost of goods sold gets overstated, margins look worse than they are, and pricing decisions get made on bad data. With a proper count, the restaurant sees the truth, and that opens the door to smarter decisions on every front. This is where the research becomes bigger than inventory alone. When done well, counting transforms into a control system for the entire restaurant. It supports better guest experience by preventing outages. It supports consistency by revealing portioning problems before they become habits. It supports finance by preventing overordering and freeing up cash for payroll and vendor payments. It supports pricing by highlighting ingredient cost changes and protecting margins. And it supports accountability by giving managers a way to compare what should be in stock with what is actually there. But you must lay the right operational foundation. That means scheduling counts right before delivery days, assigning your most dependable staff, mapping your inventory sheets to match your physical shelf layouts to avoid wasted time ping-ponging around the kitchen. And yes, a little incentive goes a long way. Free food for the inventory team? It works. In short, inventory stops being a backward-looking task and starts becoming a forward-looking management tool that drives every major business decision. The true paradigm shift occurs when a strong operational foundation meets modern automation. By integrating specialized inventory software and automated invoice processing, the game completely changes. An operator simply snaps a photo of a supplier invoice, and the system instantly updates theoretical inventory, maps items to recipes, and alerts the team to ingredient price changes. Manual counting gives way to strategic, data-backed analysis. And this shift matters more than ever right now. In an era of tighter margins, rising labor costs, and ingredient price volatility, the restaurant that embraces regular counts, invoice integration, POS-linked theoretical inventory, and variance analysis moves from reactive firefighting to proactive control. Inventory counting evolves from a dreaded Monday morning chore into a strategic asset that drives decision-making across the entire business. The restaurant of today does not just count inventory, it uses inventory intelligence to optimize operations, protect margins, and build a genuine competitive advantage. Let's bring it all home. The research is clear. Physical inventory only matters if it actually counts toward better action. And the path is straightforward. Schedule your counts consistently, choose your slowest day, and stick to it. Prioritize your highest cost, highest turnover items first. Organize your process so staff are not zigzagging across the kitchen. Train and motivate the right people. Make them partners in profitability, not reluctant participants. Integrate your invoices immediately upon delivery. That is your single source of truth. Compare actual inventory to theoretical inventory and act on the variances fast. And use those results to improve stock levels, reduce waste, order smarter, and measure real profitability. The data is conclusive. Restaurants that implement systematic inventory counting see a 3 to 5% improvement in profit margins within the first quarter alone. For a $1 million restaurant, that is $30,000 to $50,000 annually. The time to act is now. Remember, stop, manage stock, identify theft and waste, optimize ordering, and protect profitability. Your competitors are already counting. The only question is whether you are counting smart. Like and subscribe for more helpful videos like this. Connect with Forks for the experienced accounting professionals your restaurant needs. Details in description below.